Hi everyone, welcome to Strike. Today we are going to look at a very unique feature, one of the USPs of Strike, but also of my long term approach to markets. And it should be for anyone who's been long enough, who does a combination of the science of markets. We always like to put two and two together. But can you put two and two together on any platform? The answer is in most cases, no. But here on Strike, you are going to be able to do that. In fact, you can do that even now, and I'm going to show you how. So, what we did is that we've not only put the technicals, the derivatives of every stock, but we've also put the fundamentals of every stock. So, what that does is that allows you to look at historical charts of how fundamentals are changing, and then you can actually compare with how the technicals are changing, and we can get a much better result in terms of the timing of the whole thing in terms of an outcome, right? So that's the beauty of it. And the way we do that is we can actually go to the valuation chart of any stock. All we need to do is type the stock on top. Okay, and moment I type the stock on top and I click on either the charts or fundamentals, I can quickly go to the valuation chart on the left hand side. There are many other charts you can explore, but I'm going to spend some time explaining to you the valuation charts and then look at how we actually put the momentum together. So if you choose the valuation chart, you can actually pick any valuation metric that you like, okay, and plot its entire history by putting a max, and you'll see all of it here. But as valuations move, what we have done is we've given valuations various lengths over here, where you can actually get one standard deviation, two standard deviation of the valuation on the same chart. So these red and green lines essentially represent two, one standard deviation, the mean, median, -1 and -2 standard deviation. So valuations will move in this range, sometimes going to the top extreme, sometimes going to the bottom extreme. And what we try to pick is when are we at the lower extreme, and that's where the good entry points are, right? That is where you want to get in. And then it's also known that sometimes valuations continue to stretch either on the downside or the upside. You want to know when does the price momentum actually change, right? You just don't want to buy because something is value. You want to buy when the momentum actually picks up. And that is where then we go to charts, and instead of just looking at a valuation chart, we end up looking at what we call as the strike valuation setup. So in this case, I've picked up the chart of IDFC First Bank, and when we're looking at a 1 year chart of this, you actually see a long consolidation. What has happened to valuations is it's on a 1 year basis gone from the red line down to the bottom end green line. So when we reach the bottom end green line, which means we've reached almost -2 standard deviations, that's a very good entry point. What you're looking for though is a reversal in the near term momentum. Okay, so here we actually have a day chart. The reason it's a day chart is we are actually using a 1 year time horizon. Now, that means that you're a positional trader looking for this setup. But if you're a slightly more longer term investor, you'd probably think of shifting to the 3 year time horizon, where you'll automatically get the weekly chart setup, and then you'll wait for the weekly signal. You'll wait for when the RMI, and so this is the momentum, the RMI, Rohit momentum indicator, which gives you the entire cycles of any stock. So if you actually pick any stock, you can actually look at the cycle of its movements, all the way up, then all the way down, all the way up, all the way down. So these are momentum cycles that start and come back to the zero line. Okay, and this coincides with what you see in terms of valuations, which reach an extreme low point, they start picking up, and then they pick up even more. And then once they really come close to the top end, which means more than 1 or 2 standard deviations, you do get a sell signal, which you can actually trade. But when we're using the weekly time frame, you can actually trade all the weekly cycles, right? You can actually get out and then re-enter. And so there's a phase where it's consolidating, and you may actually reallocate your capital to maybe some other stock that has momentum picking up at that point of time. So what this helps you do, therefore, is even reallocate capital from one stock to another and then come back to it. It doesn't mean that you completely get out if you're a long-term investor, but you can do some kind of capital allocation or capital shift at periods where the stock goes through these weekly cycles. Now you may say, no, I'm not a positional or medium-term trader. I'm a really long-term investor and I want to be on a monthly scale. Then I'll actually go to a 5 or a 10-year chart, or I can simply click max and get all the data available. For some charts, it's all the way back to 2012, depending on when it got listed. Then you end up looking at the monthly cycles. So when you see these monthly cycles, you can note IDFC Bank came down here to 1 standard deviations. Again, here it came down to 1 standard deviation. So there were 2 points at which it got meaningfully to the bottom end of the valuation chain. And after that, when you got a buy signal on the momentum, these were important turning points for long-term investors, either down here or at this point of time. right? And from there, prices then continue to move higher. So you get an additional confirmation from momentum that yes, once valuations have been reached at the low end, you get an additional confirmation from the momentum cycles itself, which also gives you an exit point, right? Because the momentum will not remain positive forever. Now there can be variations to this. This is just one example I have actually shown you. Now if we actually look at a different stock, you might see different types of results. So here I'm going to look at Maruti. Maruti is interesting because it's been trending for quite some time in this market. And if I go to a long-term chart, what you actually see is that even though prices are advancing to the upside, okay, so here throughout prices are advancing to the upside, somewhere here valuations had crossed the 2 standard deviation line, but now they've actually come down. So when the RMI is actually turning bullish here again, it's doing so from a much lower valuation level. And that is where suddenly, so you may think prices are going up, so they are high, but this has suggested that now valuations have consolidated and this rally then therefore starts looking more sustainable. So what we do here is, therefore this RMI is bullish, we wait for it till it gives you the next sell signal, right? That is the simplistic approach. So we again need, so either we need for an entry, we need valuations to be at the bottom end, -1 or -2 standard deviations like down here, and then you need a buy signal. So even when it's here, you need a buy signal. That sort of gives you the entry point. And then once that cycle reaches the peak and turns down, you get an exit as well from the momentum itself. So you don't really need to always wait for the valuation cycle to be complete, because it may complete early, it may continue to a higher range. Also, there may be a phase where momentum is just dull. You can reallocate capital till you get the next signal. Okay, so you may think that this is not overvalued, it's still a good stock, it's not undervalued, but you want to participate, but the momentum is not in your favor. So you can actually reallocate capital elsewhere till you get the next signal to do that. So that's how you are able to combine valuations with the RMI. What you also get on the strike valuation setup is you get a suggested valuation tool, which means that based on fundamentals, based on the sector that you're really in, which are the valuation metrics that are recommended. So these are usually the first two, and then we have all the other generally used valuation metrics if you actually want to see them. So some people may want to go to market cap by sales, you click on market cap by sales, but those are the suggested ones based on what sector you are in, or what particular company requires that particular valuation to be done. So that is based on the suggestion given by the research analysts who work on these sectors in industry. Now we'll take one final example to give you an understanding of how this is done. Let's go to Tata Steel. We click on charts, we go to the strike valuation setup. Once again, depending on the time frame, I could be a near-term trader with the daily chart. Okay, so then I'm looking at 1 year valuations and it may appear high. But even though it's high, what I actually want is a sell signal from the system itself, right? And a buy signal from the system itself. But if I'm not a short-term trader, okay, and see here the valuations went up. So there are multiple buy-sell signals. But what I'm really looking for is, major extremes. So I can move to a 5-year chart. Now I'm looking at weekly data. On this weekly data, note something interesting happening on this particular graph, and that is that valuations here have really come down, right? After going peak, rising all the way to the top end of the range, they actually came down to the bottom end of the range, and now again they're at the top end of the range. So immediately that pushes me to look at the momentum, right? The momentum cycle. So I've moved to a 10-year chart so that I can get a slightly longer term cycle. Now very simply, when you get very close to the bottom end of the valuation range, you want to use this buy signal as an entry point, and then when you get the exit, that's your pausing point where you actually pause. But once again, you get another entry point. This is at a higher valuation level, but it still gives you an entry point, right? So again, it depends on which metric you use. Like that was EV by EBITDA. Moment I move to price to book, you'll find this matching much more. So you need to make that choice as to what is matching the cycle perfectly. So here you are at -1 standard deviation buy signal, so that is a perfect place to actually get the signal, and then you got your exit. Then after that again valuations came down almost to 2 standard deviations minus, and then you got another buy signal over here, which gives you another entry point, and then again an exit here. But this time around you've seen a long consolidation, right? It's not been a sharp dip like this one. But even then, valuations did drop to the bottom end. We saw that in case of EV by EBITDA, it actually dropped way lower. So when you look at a combination of valuation metrics, you may come to know that one of them has really dropped off. And so that was a good point to start looking for the next buy signal, which actually ends up coming only here, somewhere here. And then from there on, now this is a new cycle which is ongoing. It's still in buy mode until we actually don't get a reversal of that cycle, even as valuations are rising. We can let valuations run, because you never know, valuations can go high, they can stay up there, but till you don't actually get a momentum cycle reversal, we are not finally at the end of this move. So that is how you use the strike valuation setup to make entries, whether you're a positional trader or whether you're a long-term investor. You can use the weekly or monthly time horizons to actually find entry and exit points, reallocate capital within your portfolio to different stocks, increasing or decreasing the weightage based on what the RMI plus valuation charts are really telling you.